I was looking at some of that data too, and that kind of screams to me that we don't understand what the revenue potential is. So therefore, we're really focused on what the costs are. And yes,
Yeah.
anything you're going to do is going to have some type of a cost to go with it, right?
Welcome in, everybody. You're listening to Wrestling Payment.
It's really just exploring and seeing what makes most sense. And it sounds so much easier than it probably really is. But stay tapped in, stay tuned into different, groups and making sure that, you're getting in at the right time, taking that first step that makes the most sense for your organization. And sometimes it's really just this discovery phase, I keep saying, where you're just kind of seeing what's out there and what would make sense for you.
That's a good point, because it doesn't really cost anything to start looking, right? Other than time. There's so many fantastic models that are out there now, from, the small amount of sponsorships, banks that are actually doing real sponsorships, it's pretty small, that there's a lot of opportunity there. I think now is a good time, because 5 years ago, some of the banks had to really build out their own infrastructure for FinTechs. But now, there's some great partners with niche. I think you've got Braid coming up later on. They've been on with Joe before, and they're probably coming up. Companies like Braid can get a small, mid-sized bank FinTech ready in no time. I saw Joe recently had Travis Delaney on there for Balance Trust the other day, or a couple weeks ago. Balance Trust can come into a small, mid-sized bank and get them compliant, or at least get the third and fourth party management part going. So at least you can assess your risk. So I think because there's more components that a bank can pull off the shelf and plug in, one, it reduces the financial overhead, it reduces their risk, but also makes them more open to certain types of partnership. I think a great place to start is with some of the niche partners.